few things. Let me share them with you. First thing we're going to talk about, and many of you already know this, is that all students have access to Microsoft Office 365. I'm going to go through kind of how you do that. And we have a textbook problem from last week that we're going to go over and start the Chapter 2 practice exam. And hopefully get to Chapter 2 practice exam part 1, but we'll see how this all goes. But anyway, I first want to go over this. All students have access to Microsoft Office because some people have emailed me saying that they don't have MS Office, but actually you do have it. And even if you have an Apple computer or something like that, you can use it through the browser. So the first thing you need to do is go look at my YouTube account. No, don't look at the YouTube account. It's over here. So if you sign into your email account through the school, you wait a really long time for it to load. There we go. Okay. So when you go to your email account, by the way, this isn't a handout. Nope. This is the handout. It's kind of a crummy handout, but it has most of the stuff in there. So the first thing you're gonna do is click on that little waffle square looking thing. This thing. And once you click on that, these are all the apps you have access to. So if you want to open up Word, you can. And you get something that looks like this. And hidden down here near the bottom is this upload. And now this is kind of important. So if the files that I send out, you first have to download them onto your computer. And I would encourage you to download them onto the computer instead of onto the into the cloud. And the reason being, when you save stuff on the cloud, sometimes there's permissions, and either through your computer or on the cloud outfit itself, if the cloud sharing thing, that make it hard to update the file. So sometimes you can open the files, but you can't update them. This is why I don't use the OneDrive or whatever when I send stuff out. In the past, we've tried it, and it hasn't worked for a number of students because even though they could work on the thing, they couldn't save it to the same place. They had to save it someplace else. And sometimes they would even lose the data that they put into it, saving it because it wouldn't allow for them to enter data. So long story short, you download the file to whatever you're using first, and then you can upload it into Word. So I'll do this one. Formatting might be a little kooky, but so this is the, actually that's from a different class. All right, well, that's fine. This is a different, the idea is exactly the same. So this is something you can't see. I have got to go back and do that again. Sorry, let's go back. Okay, so I'm going to go to this upload. So it's down here in the bottom. Let's upload. Click on it, and I'm going to upload. This is actually from class last night. Upload a document from a class last night, but whatever it is, wherever you have the document saved, you upload it to that. All right. From here, you can save the file and submit it. So you actually don't, I think some students are saying that I said you have to submit it in PDF. You can actually, no, you can, anyway, I'll take it anyway you can submit it. But you can submit it in a document form. Go ahead and leave it in the Word document if you want. If you want to put it in a PDF form, you can. It's a little bit, a few more hoops to jump through, but you can certainly do it. It's not that big a deal to do it. Come on, you. And you click on File. Sometimes it comes up nice and easy. Sometimes you get this. If it comes up with this, you got to hit on the little More Options and Save As. And you can download it as a PDF. Now, you need to have it saved on your computer, the doc file to save on your computer to download the changes to it. But you can certainly do it. You can load it to a PDF if you want. You can leave it in the Word too. You can submit it like this. This is fine too. Okay, so long story short, everybody has access to it. So if you want to, fill in the blanks and submit it that way. But if you want to do it by hand and take pictures, that's fine too. I'll take it any way you can, but you do have access to it. So if you want to use, Word, Excel, PowerPoint, you actually, through the school, it's free. Well, it's probably built into tuition somewhere, I'm sure. But it's available to all the students that you can have it for all your classes. So any questions on that? Well, anyway, that.
Thank you. That helped.
Okay. Well, I don't think it's. The number of students have asked about it, so it obviously is not very well publicized. So, but anyway, you do have it, and you just going through your email account, and it'll all be available. And there's other stuff too in there. There's stuff in there that I've never even heard of. If you look at all the apps, it has all kinds of. I don't know what those are, to be honest with you. But yeah, so there's a lot of stuff in there, and it is available. And I think that I'll have to look this up. I believe there's also a way to download the actual applications onto your computer if you want to. I don't know how much space it takes up and all that kind of stuff. But I believe that you can actually download the applications themselves for Office 365 onto your computer. And from what I understand, they work a little bit better that way. But you get a few more options doing it that way. But yeah, so if you want to do that, let me find the link for that if there is one. I'm almost positive there is. So, but I'll find that so you can do that if you want. I'll say one more thing about this, and I'll shut up about it. But another thing is, many of you are business program students. So one of the things I would tell you is that many companies work with Microsoft Office stuff. Now, for whatever reason, I don't know, but they tend to be in business. They tend to be more using Microsoft than Apple. Not all of them. There certainly are places that use Apple stuff, but a lot of them use Microsoft. So even if you're using an Apple, that's nothing wrong with that at all. But it's good to have the Microsoft stuff available, so that you can seamlessly, wherever you start working, will seamlessly fit in. Okay. Well, let's see here. Okay, so tonight, the next thing we're going to do is the, I told you guys to give this a try. Exercise number 2. And part of the reason for this is that, it's good to see it's good to see different problems that given in different formats than other people. So up until now, the handouts have been made by myself. And quite honestly, most of the transactions are pretty run-of-the-mill. You'll find that in accounting, that most businesses run through a handful of types of transactions. But it's good to see it kind of in different formats and different wording and that sort of thing. So one of the things that about this, I think I talked a little bit about this last time. Share the screen. Okay, so here are, these are the accounts that are used by whatever business this is. Innovative Consulting. And I'll go ahead and tell you what they call this. The accounting lingo for this is oops. In business, they call this the chart of accounts. And the chart of accounts are the accounts that you can use. And this is to avoid a whole bunch of accounts that are all the same thing. You don't want to have 6 different accounts that all mean the same thing. Office equipment, equipment for the office, whatever, desk equipment. You could have like as many people as you have working, you could have that many different names for the same thing. So they have this chart of account. They say, look, everything has to fit into this account. If there is something that doesn't fit in, we'll make a new account, but we want everyone to use these same accounts so that we can, have all those things that are the same together and all that kind of stuff. Okay. So these are the accounts that we can use. So here's the asset accounts. Here's the liabilities, equity, blah, blah, blah. This one's kind of wacky a little bit. Fees earned, that's what they call revenues. And these are the expenses. And over here are dividends, which are not expenses, but they're kind of lumped together with them. Okay, so let's go through these. Paid rent for the month, $2,100. What accounts? Now, the accounts are going to come from up here. So you kind of got a choice up here of which accounts to use.
Rent is expenses, so expense account.
So rent expense, yep. Oops, that's not how you spell rent. Expense.
And cash, I guess.
Yep. Exactly. Yeah, so they paid the rent. They probably paid it with cash. Probably this account. And, okay, so now the rent expense.
That's an expense.
It's always increasing.
Yeah,
Cash in this case is going down.
decrease. Mhm.
But now here's the thing when you run into an expense, and this is a good thing about when you have a journal entry doing expense. Expenses are always debits.
Debit.
I can't type tonight for some reason. Worse than normal. Okay. Yeah, whenever you see an expense, it's a debit. Now, if you're making journal entries, notice how great that is. Right? If you have an account that has an expense, there's usually only 2 accounts. So if you have an account that's an expense, you know it's a debit.
Mm-hmm.
That means whatever's on the other side has to be
Credit.
Credit.
a credit. So if you know one of them, you know both of them. And expenses are nice to, with the journal entries for, because you know exactly what those are. They're always going up. And if there's some weird thing, if they make an error or something, maybe it'll go down, but for the most part, they're always going up. So when you run into rent expense, you really don't even have to do this stuff. The second you say, okay, there's an expense here, it's a debit. Now we will go, I'll go ahead and put the other one up here, but truthfully though, if you just want to make the journal entry, the minute you get an expense, you know what the other one is. Okay, so I'll go ahead and do the cash though. Okay, cash.
Increase with credit.
It's decreasing, so we'll decrease with a credit.
Increase with credit. Increase.
There we go. So whenever you see expense, paid advertising expense. Hey, look at that.
Look at what?
Okay. Advertising expense.
So before we even do anything, you can make the journal entry.
Mhm.
Yeah.
So this
Yeah.
is advertising. Expense. But yeah, I mean, expenses are always debits, so you can just jump right down here. You know, you didn't even do any of these. We know that this is the debit. Whatever's on the other side paid, they probably paid with what?
Cash.
Cash.
Yeah. So you know, cash must be the credit.
Mhm.
I put it in, but oh wait, I didn't put the accounts up here. See, that's all. But truthfully, you could skip this part. Expenses are always going up.
Come on. Mhm.
Okay, so that's how it began. Expense, debit. Okay, pay cash for supplies. What accounts?
It's expense
Apply.
and
Accrue.
cash.
Asset.
Yep.
No.
So supply, I think is it? What you guys said was right. Supplies and cash. Let me check out two. I think this is up here. Let's see here. Supplies. Yeah, supplies. Okay, are the supplies going up or down?
Up.
Up. And how about the cash?
Down.
We have more supplies, we have less cash. Those are both assets. Okay, and so they're increasing with debits. Increasing with credits. Okay, so supplies, does it get debit or credit?
Supplies will debit.
Correct. So supplies, it's an asset going up. So it'll get the debit of some number, 1,300. No, the cash would be the credit for no other reason. These have to equal, but if it's oops. And so revenues and expenses are nice because they're either debits or they're credits. Expenses are debits, revenues are credits. These other ones, the balance sheet ones, we still have to work on because they go up and down. Okay. Purchased office equipment and account.
Purchase office equipment.
So which account, what are the accounts we're going to use? Remember the one-
Oh,
hold on, wait. Easy. Purchase office equipment and account.
Equipment, office
Office
equipment,
equipment
and
and
account,
cash. Oh, on account.
Accounts payable.
accounts
payable.
Accounts
payable.
payable, yeah, I had it.
Yeah, an account would be accounts payable. Okay. And by the way, this is one of those ones, the office equipment. You know, if they like call it office equipment or equipment for the office, whatever. So the chart of accounts is really there to say, okay, everybody's got to use the same account. Okay, office equipment, increase or decrease?
Increase.
Increase,
And now for the tricky one, accounts payable.
Increase.
Yes, it's not that tricky. Yes, it is an increase. So we owe more people. We owe more money. So the accounts payable is going up. Okay, so we have office equipment. Okay, so I'll say up with a debit. Accounts payable is going up with a credit.
Credit.
You notice they're both increasing, but one's doing it with a debit, one's doing it with a credit. Okay.
Increase. Yeah, that's what I'm saying.
This one's a little bit vague, but it says received cash from customers on account. So these are customers we already had set up. They already had an account with us. They owe us money. So what accounts do you think we're going to use?
Accounts
Yeah, it's gonna-
receivable.
Yep, cash and accounts receivable. Okay, is cash going up or down?
Up,
Up.
up,
Tricky one, accounts receivable.
Down.
yeah.
Yeah, they no longer owe us. Now, we'd rather have the cash than the accounts receivable, so we're happy about that. But, yeah. Did I tell you guys about abbreviating? Maybe I did.
Yes.
Oh, I did. Oops.
Mhm.
Let's do it correctly.
They are.
Yeah. Did I show you how to do it wrong? Oh, let me do that for you. All right, so yeah, so you can abbreviate this AR. Feel free to do that. It's very common. Okay, so cash. This is accounts receivable. Let's leave it as AR. We'll see. Okay, so yeah, cash. 7,800. And accounts receivable is going down.
There's some credit. Okay.
Yeah, so they no longer owe us 7,800, but again, we're probably pretty happy about that because we'd rather have the cash than the IOU. So even though it does just, it's trading one asset for another. But so, you know, this journal entry isn't going to change your assets, they're going to stay the same. But it'll be. So one asset goes up, one asset goes down, but it's okay. 1020. Paid creditor on account. What accounts?
Accounts payable.
Yep. And
Cash.
Yep.
okay, so accounts payable and cash. Space here. Okay, the accounts payable, is it increasing or decreasing?
It would decrease. Decrease.
Good. We don't owe them anymore. We just paid them 2,900. So we don't owe them. We owe them 2,900 less. Let me put it that way. Okay. How about the cash?
It will decrease too. It
Yeah,
decreased.
decrease, decrease.
Yep.
Yep,
Okay, so we have cash. Accounts payable. Cash is going down with a debit or credit?
debit.
Credit. Oh, wait, never mind.
Wait a minute. No,
Cash is going down. Accounts payable is going down with a
debit.
yeah. By the way, you do not have to put those in the. Oh, accounts payable. You could also be. This could just be AP. You do not need to put both of them. One or the other. Okay. Hey. Miscellaneous expenses. Expenses are always,
Debit.
Debits.
yeah, we can make the journal entry right now. So we're saying expenses 400. And we paid cash. So cash must be the credit. I'll go through the stuff up at the top in a minute. But if you're going to do an expense, if you just want to make the journal entry, you can actually just jump right in. Okay, now here, abbreviate this one. Yeah, all right. Oh, that's not right. Let me do it here. Okay, miscellaneous expense. And again, expenses, debits. They're always increasing. As time goes on, you know, 1 month's worth of expense is more than 2 months worth of. I said that wrong. 2 months worth of expense is more than 1 month's worth of expense. Okay, so expenses. Always debits. Cash is budget is going down. Credit. But truthfully, I mean, if you know that it's an expense, that's your debit. Paid telephone bill for the month. Now remember, we got these accounts up here. These are what we're using. They're paid, right? Paid okay. So what accounts are we probably going to use? Cash is one of them. We paid it.
Accounts
Expense,
payable. If
Utility
you paid your,
expense.
Utilities and expense,
right,
You probably,
paid phone bill.
Utility expenses.
yeah, probably.
Really?
utility expenses.
You know, it's funny. That's kind of a throwback to
Yeah.
when we had the landlines. You know, I'll never forget my nieces and nephews at the grandma's house with one of those dial phones. Like,
Yeah.
what is this? It's a phone. How? All right. Yeah. So cash probably and utilities expense. This is a little bit dated here, but okay. So let's go back. Okay. So utilities expense.
Increase with debit.
Yep. Again, we could stop right here if we wanted to. If it's an expense, it's going to be a debit. I even have to jump through those other hoops. I'm going to jump through them anyways, just because I like jumping through hoops. But you do not, you know, if it's an expense, it's going to be a debit. Pay with cash. Okay, so we would know this is journal entry even without jumping through all those hoops. The expense is going to be the debit. Whatever's on the other side, whatever the other account we have is going to be the credit.
Credit.
So you can actually do this one without doing any of that other stuff. Now I'm going to do that other stuff just because loads of time to kill. Okay, so utilities expense.
Mm.
Goes down. Oops. So I mean, there's nothing wrong with going through these, but again, if it's an expense, it's a debit. And you know, unless something crazy happens, like you know, there's an error or rebate or some weird thing, it's going to be they're always debits. 2 months worth of utilities expense is more than 1 month, so they're always increasing. Okay, fees earned and billed to customers. This one's a tricky one.
Fees earned and billed to
Fees
customers.
earned and billed to customers.
Revenue or something.
It is a revenue.
Accounts
It's fees
receivable.
earned. It's a fees earned up there too.
Oh,
Yeah, no, but it is, you're right, and you're right. It is a fees earned is a revenue. That's the name of it we have, but it is a revenue. It's a type of account, but we're going to use the fees earned account. It's not cash. So coming down here,
And account receivables.
That's what I got.
I was thinking
I was
accounts
thinking
receivable.
accounts receivable.
I like
yeah.
I like
Accounts
what you said,
receivable.
Veronica. Because it's earned, you got it.
And then it's receivable, right?
I would think so.
Fees earned and accounts receivable is correct.
Yeah,
Ah, we got
we
it.
got it then. I was scared.
Okay, so fees earned, this is a revenue account.
Yep.
Okay, now revenues are always increasing. And actually, once we have a revenue,
Increase.
we can make the journal entry right here. Fees earned is a revenue.
That's a debit.
So fees earned is a revenue. Revenues
It's credit,
are always credits.
increased by credit.
Yep. So we can actually do the journal entry right now. If you run into a revenue, just like an expense, except it's going to be a credit. So fees earned.
Increased by debit.
Is it me or is that worded weird?
Fees earned.
No, fees earned and billed to customers, like, is it?
What they're telling you is that they haven't been paid yet. And yeah, it is a little bit different kind of wording. So we earn the fees and we hand them a bill, but we haven't collected anything yet.
Oh, okay.
Yeah, it is an odd way of kind of writing. You know, yeah, kind of like you completed the work. Completed the work and then handed them the bill, basically what happened.
Okay, got it.
Okay, and the other side is accounts receivable. Yeah, so again, you run into a revenue. It's a credit. They're always credits. So revenues. Hey, it's Halloween, 10/31. Yeah, so it's gonna be fees earned and accounts receivable is. And accounts receivable is increasing. They owe us money now. So it'll be a debit. But you already knew that. You get the revenue as a credit, you know what the accounts receivable is. Oh, and accounts receivable could be AR.
Utility.
Yep. So this one paid electricity bill. It shows electricity bill for the month. Now it said paid, so what accounts are we probably going to use?
Cash.
Cash
And
and utility
utility expense again.
expenses.
I paid it with cash. And the utility expense, and we say yippee. Because we
Trace
can
with
make the
debit.
journal entry right now.
Mhm. Increase, decrease.
And again, you know, if you hit it right into an expense, you kind of don't even need to do this. I mean, you can, there's nothing wrong with it. But if it's an expense, it's going to be the debit. They're always.
Mhm.
kind of go back over one of the blanks. So 1031. What am I doing here? Oopsie daisy. Learn how to use a computer. Okay, our cash is going down. It's a credit, but we already knew that because these two sides have to equal. So if you know one's a debit, you know what the other one has to be. Paid dividends, what accounts?
Accounts receivable.
Cash.
Right, cash. So these are dividends that we're these are dividends that we're paying to the owners. So we're actually paying money out
So
to the
payable.
owners. You know, every now and then they get money from the place. So the way they get
Oh, so that's,
through
That's
paying,
going to be payable.
Cash and dividends.
right.
I hear dividends. Wow.
yeah, so cash. Dividends. Now, dividends are also similar. Well, I shouldn't say it this way. Dividends, even though they're lumped
Increase or
together,
debit?
not, but they are always,
Decrease.
they're actually always increasing the way we have it showed here. But I know why you said that, and there is a way. Some books show it the way I stuck it here. Let me fill this in, then I'll tell you. Okay, so dividends are always going to be the debits. I know why you said decreasing, because it's just shown as a negative on the statement of retained earnings. And just so you know, there are books that show it that way. There are books that show it as a retained earnings entry that's negative, so it's decreasing the retained earnings. There are books that show it that way. This book shows it with dividends, so we're going to use dividends. But I know you said negative, because you say, okay, wait, that's retained earnings. I know it gets subtracted from retained earnings. Notice in both cases, no matter what way the book shows it, the dividends are going to be a debit. Okay, so you know, some books show it as a reduction of equity. They'll show it as a debit. Some books show it as something completely separate, like this one does, and so it will be a debit also. It'll just be a stand on its own. Okay, cash decrease with credit. But anyway, dividends are always debits.
Mm-hmm. I actually had that, but look at it. I actually had cash and dividends. That's cool.
Different books show it different ways.
Mhm. All right. Let's see it out.
Hey, we're done.
Yep, that's it.
Yeah, so that is that one.
Got a lot of paper here.
Okay, why don't we? I'll put the last one back up here. let's go ahead and take a break, and then be back at 7:02. How about? And at 7:02, we will start the practice exam. Part 2. Space in there. Okay, so we'll be back at 7:02, and we will have, we'll start into the practice exam part 2, and you can pull that up. It looks like it's,
Professor?
yeah,
Hi, can I ask you a question while we're on break?
sure.
So you said, like, I wrote down the steps of like how you can submit the homework, but also, I wrote it all down on paper with, you know, handwritten. And the one that's more than 10 pages, I was wondering if there was a way for me to send it, you know, picture wise, like I have been, on Blackboard. But I know you can submit it more than 10 pages. So I was thinking maybe
You can submit on
submit-
both.
it doesn't work for me. I can't like I can't like it won't submit if it's too many. So I was
Okay.
thinking of sending like the first half and then the second half kind of like you know you can resubmit it like as a
Yeah.
second attempt.
Absolutely, absolutely.
Okay, good.
Yeah,
Uh,
no problem at all.
Okay, thank you.
No, no problem. Okay. I'm gonna start out with chapter 2 practices and part 2. And I'm gonna kind of go through some of these. The first 11 through 20. As you can probably imagine, part 1 has 1 through 10. And then this is 11 through 20. But these are just for the accounts themselves. Will they be
Debit or credit.
credit? So there's nothing more to it. And the reason I say that is don't overthink these. You know, you say, okay, cash went up. Well, we must have sold something or something like, sold stock or something. Well, they're just asking about that account. That account is there. As humans, we always try to make sense out of stuff, but when they're really just asking what, for that particular item, how does it increase or decrease? And by the way, it's all the way up through accounting. People taking the CPA exam will read a question and say, oh, well, that means this. Looking what they're, what they're asking for is actually, sometimes anyways, not as complex. Okay, so these, you can actually answer these from our list thing.
Mm-hmm.
Put these on tape.
Yeah.
Yeah.
Well, like all the answers was credit. I did 'em. So many
No.
credit. Most of them.
Account increase is debit.
Yes, for the first one.
And then
The
account
second one is
payable,
credit.
account payable
Account decreased by
Decrease.
16. Decrease and increase.
decrease is also debit, I think.
Okay, so cash increase.
Debit.
Yep, cash increase.
Right, debit.
Yeah.
Revenue account increase. Revenue is
Revenue account increased by 320 is credit.
I do credit.
Supplies.
Supplies.
I did credit.
Oh, I can't do it here. Okay. Yeah, so supplies are
Credit. Okay.
accounts payable.
I did debit.
It decreased, so accounts payable. So liability decreases with
Debit.
debit.
Okay.
Bonds payable.
I did credit.
Credit.
Yeah, credit.
Oh, it's down here. So yeah,
Okay.
Utilities expense.
It's debit.
It's expense, so it's debit, yeah.
Yeah.
expenses always debits. Again, it is possible to have an error or something like that, or a refund.
Revenue.
Revenues are always
The credit.
Revenue is credit.
Credit. Equipment account
Equipment is credit.
decreased by credit.
yeah. So equipment
Revenue
it went down, so it'll be
increase by credit.
Yeah.
Credit.
yep.
Yeah.
Revenue increase.
Advertising expense increased by
So debit. The last one is debit.
debit. Yeah, it's expense, so it's always debit.
We will get there.
Yes. Jesus.
Okay.
This debit and credit is something. You gotta know which one, boy.
Exactly.
Accounts payable.
It really is.
Yeah,
the
it
hard
gets a
part.
little confusing.
Most of
Yes.
the businesses are usually not that difficult.
Payable decreased by debit.
Something. This down a little bit. Move this one. Now you'll notice I left out all that junk in the middle. all that
Just
other
supplies
stuff
with
left out of
cash.
there.
200.
So what we're going to do is go through these and just going to put them right into the journal entry. So let's put the accounts in. So what accounts are we going to use for number 21?
Cash
Supplies.
and supplies.
Is the cash going up or down?
Cash is going down and
Purchase.
supplies is coming up.
Up.
Supplies is debit and cash is credit.
Yep. So these are the accounts we're using. And so we can just come down to this thing and say, okay, cash is going down.
Yeah.
So there's cash going down with the credit.
Supplies is the debit.
And supplies.
It's going down.
Supply is going up.
Going up. Yeah, we now have more.
That's going, yeah, cash down, supplies up, right.
And by the way, I don't care what order you put these in. As long as,
Oh, really?
as long as the
I thought-
cash is the credit. If cash has the
Once
credit,
a debit, it's gotta be first, yeah.
well, that's there's actually no real rule on that.
Oh, okay.
It's not, that's something that they put in textbooks.
Oh, okay.
So you know, we're kind of streamlining it now a little bit. It's okay, which I do accounts, and we can go to this table. You can also go to the table down here, that thing. You know, either way is fine.
Mhm.
This one has all the accounts in it, so it's okay. Borrowed cash from the bank using a note payable 8,000.
We do cash and accounts payable.
Cash going up or down?
Cash is going up because we got it from the
Yeah, I'd probably use, you can use accounts payable is fine, probably notes payable would also be a little more descriptive.
okay.
But either one's fine. And by the way, this could also be just NP.
So we did cash, which is a debit. And we will do notes payable.
Is notes payable going up or down?
It will go up.
One more money. One second. Allergies are kicking in. Okay, so I'm back. How you guys been? All right. So cash is going up with a
Debit.
$1,000. And notes payable.
Going up with credit.
Credit.
Okay, we'll increase it. So we got more cash, but we also have more liabilities now. Received utilities bill, 150.
Utility expense.
Good.
Debit going up.
And what's the other side?
Receive that is,
Doesn't- We've paid it yet. It doesn't,
Accounts payable.
yeah. Account payable is going up, but we really don't even need to know that because if it
Going
is
down.
expense, it's a debit. Accounts payable, liability. It's going up with the credit. So whenever you see expense, it's a debit. Oh, employees' wages for the week.
Wages account,
Yeah, which accounts are we gonna use? Oh, wages,
wages, yeah, wages
Wage
account,
account, wages,
wages,
accounts payable.
good, wage and expense. I mean, you could put accounts payable, you could also put wages payable. Look at actually wages payable, more descriptive, but yeah, accounts payable is fine.
Wages expense and wages payable.
And this could be just, see it, wages payable, WP. Okay, now, we got expenses.
Expenses are always debits. Wage,
And wages payable must be the other side.
payable, which would be the credit.
This is gonna be a liability.
increase with credit.
And you can also say WP. Now wages payable, I do have it.
Increase with,
Yeah, so it's increasing, so it'll be a credit.
Right.
And again, expenses, say yippee, well, you probably don't say yippee because it's an expense, but you know the journal entry anyways. Okay, use cash to purchase equipment.
Cash and equipment, easy.
Cash and equipment.
Cash going up or down?
Cash go
Cash
down.
is decreasing. Went down really.
Equipment,
equipment is decreasing.
Equipment will go up.
okay, so let's go to the, here we have cash.
That's just an
Increasing
asset.
the credit. Equipment is increasing and it's on the same screen, but equipment is a,
Debit
Asset.
and assets, and it's debiting. Equipment is
by the way, you do
debiting.
not need to put this asset going up, asset going down stuff in there.
Okay.
And this cash is
Yeah.
decreasing here.
So this one, cash is going up. Cash is going down, equipment is going up. This is actually nothing would happen in the total for the on the balance sheet. You're just exchanging one asset for another. You know, theoretically, you're no better or worse off. Now, presumably you bought the equipment for some reason, but okay. Let's see. pay cash for a truck.
Hmm.
Would
One
that
is
still be
cash
Cash, cash.
and the other
equipment?
Uh,
Would a truck still
equipment?
be considered equipment?
It
Oh, yeah,
should.
probably equipment.
Okay.
Sometimes they might just call it truck, there are assets that are just called truck sometimes. But yeah, probably cash and equipment is probably the best. Okay, and cash is going down with
Equipment, which is a truck,
okay, equipment is going up with
Up.
a,
with the debits.
and is this confusing when I put in the asset plus stuff? I don't know if that makes it better or worse. The only reason I put that in there is so that people know how I came up with a debit and credit. Supplies are purchased on account.
Supplies account and accounts payable.
Yep. Supplies accounts going up or down?
It will go up.
And accounts payable?
Will go up. Yeah, it will go up. That means we owe more money.
Correct. Yep. Yeah, now in the future, we're gonna pay it off, but at least when we first do it, the accounts payable is gonna go up. So we have more assets, we also have more liabilities. Okay, so supplies is an asset,
So it will be debit.
go with a debit. Okay, still doing insert stuff here. Let's see.
Supplies.
Yep, so cash, see supplies going up, so supplies. Accounts payable.
Increase with credit.
Accounts payable is a liability.
Mhm.
Uh,
Increase with credit. Okay.
over there.
Perform services. Mhm. Services. Revenue.
Perform services for cash.
Yeah,
So,
Cash.
yeah, Kevin, yeah, so cash is gonna be one of them.
Service revenues?
revenue.
Revenue, yeah.
Yeah, service revenue is fine, or revenue, either one. That's what- Okay, is the cash going up or down?
It will go up.
And revenues are always going up. And actually, we run into a revenue, we say yippee. Because revenues are always,
Increase with credit.
yep, they're always increasing, they're always credits.
Cash is an asset.
So it becomes debit.
Increase with debit.
And credits, service will go up with credits.
Yeah, so if you put service revenue or services earned or something like that, it's a revenue account that would be increasing. They're always increasing. So whenever you're into a revenue, it's a credit, whatever's on the other side, cash, accounts receivable, whatever it is. It's going to be the debit, because these two have to equal. They have to equal in total anyways. Now, if you have more than two accounts, you may have to do a little more work, but if there's just two accounts, the debits have to equal the credits. Purchase office equipment on credit.
So it will be equipment and accounts payable.
Good. Equipment going up or down?
It will go up.
Yep. And accounts payable?
It will go up.
That's the one that I think is the hardest to visualize, the accounts payable, because you think, okay, that's negative, right? We owe money. We do owe money, but it just means that we owe more money when that goes up. We owe whatever, $1,400 more money. Okay, so equipment.
Debit.
Assets.
Yep.
Mm.
Let me do this. Find you. There we go. Okay, so equipment is going to be a debit. And the accounts payable.
Increase with credit.
Yep. And again, you do not need to put in all this extra stuff that I put in here. Equipment accounts payable, and you also abbreviate those. This could just be AP.
Hmm.
Okay, here's one with more than two accounts, so this one we have to pay attention to. All right, so purchased equipment and land for $25,000 cash. Okay, so what?
Land and equipment is assets.
Yep.
So we have land, equipment, and cash.
Yeah.
So land. Okay, land and equipment, plus or minus?
Equipment is plus.
Plus.
Okay, equipment,
Equipment is plus.
Mhm.
and cash.
Cash
Cash is
minus.
minus.
Good. Okay, so we have three assets here.
Yep. You sure do.
So take the land.
Plus debit, credit.
Yes, yes, and yes. So land is going up, so it's increased with the debit.
It's with debits. It's 15,000.
Equipment is also an asset.
Debits. 10, 1, 2, 3, then cash. would be
Cash.
25.
Assets going down. Oops. You changed it. Okay, so
Plus.
Land is 15,000.
the land,
10,000.
it almost lined up with it. So land and equipment are both going up. And cash Making a mess out of this one.
Mhm.
All right, so cash is going to go, so this will be a debit, and credit.
Credit.
So equipment is, well, I got these in different order. I put land first. If you put equipment first, it'll be 10,000. So equipment is 10,000. Okay, now notice that even though none of these accounts are the same value, they're all different, but the debits do equal the credits. You know, if you add up this side's 25,000. You don't have to put this in, by the way, but you know, the debits do equal the credits.
Yeah.
So even though it's split up under for two accounts, debits do still have to equal the credits. $31, this one gets missed sometimes, not tremendous, but more than some of the other ones. Received cash from a customer previously billed. What account?
Cash from customer. Accounts receivable and cash.
Good. Accounts receivable up or down?
It will go down.
Good. Yeah, so this is, someone owes us, that's the accounts receivable. All right, so accounts receivable is going down. They were owed us money, now they just paid us. Now, don't get me wrong, we're happier to have the cash than the IOU, so it's not a bad thing, it's a good thing, but cash is going up, accounts receivable is going down. So cash.
Increase with debit.
Accounts receivable.
It will decrease with credits.
Yeah, so they're paying off their accounts receivable. So cash is going up. And if people make an error on this one, what they're always tempted to do is say, oh, the customer is billed, so this will be a revenue. It's when they say previously billed, it means that they've already put the revenue on the books. It'd be revenue and accounts receivable. So you're not going to count that revenue twice. You're just going to do it, you know, now you're just picking up for the IOU of 470. Sold common stock to an investor.
Equity accounts and
Cash and common stock.
Good.
Yeah.
So cash. Up. Common stock, and yes, it is an equity account. And it's going. Do we have more owners or less?
more on it.
Or
It's gonna be up. So these are both pluses.
increase with credit.
Yeah. And now I know when you see sold, you think, okay, it'd be sales or revenue, but this is dealing with the owners, and you don't have revenues and expenses with the owners. You know, in this case, they're just buying more ownership. Okay, so cash is going up with a debit. So and common stock. Now, and here's the thing: you get on a test and you're saying, okay, I can't remember if you know, if common stock is a plus or minus. If you know one of these, if you know that the cash is going up and it's going to be a debit, whatever it is on the other side is going to be a credit. But down here, common stock, it'll increase with a credit.
Credits.
Is this confusing when I put those in there? Maybe that's confusing.
No,
No,
it helps.
no, it helps.
Oh, okay. 33 is a wacky one. Received cash advance from a customer.
Received cash.
Revenue.
Cash and unearned
Cash.
revenues.
Revenue.
Cash and what's the other side?
Unearned revenues.
Yes. Unearned revenue. Which is really not a revenue at all. It's an unfortunately named account. It's a, what kind of account? What kind of account is unearned revenue? Oh, come on. Those are toy.
Liability.
The liability. So unearned revenue, customer that says liability. This is sort of the opposite of normally what we think of. Normally you think of, we do the service and we have them the bill, but they haven't paid yet. So the customer hasn't paid. We did our work, but the customer hasn't paid. This is just the opposite. The customer has paid us, but we haven't done the work yet. So, and it could be for any number of reasons. Maybe you don't know the customer and whatever. But so this is just the opposite of normally what you think of. So the customer's paid us ahead of time. We haven't done anything. It's a liability because if we don't do anything, we have to hand it back to them, right? I mean, either we do the work or we got to hand this back to them, the 360, whatever it's for. Okay, so our unearned revenue is going up with the increase of the credit. Our cash is also going up. So our cash is going up with a debit. So we have more
Debit.
cash, but we also have more liabilities now. And until we earn that revenue, it's going to be liability.
Hi.
And again, unearned revenue really isn't revenue at all.
Hello.
Oh, I need to try.
No Zoom.
That's a weird one. Okay, issued.
Common stock for cash. Cash.
Now, issued is the same as sold. So when you say issue, I agree with you. Because I realize I put this there. But issued is the same thing as sold. So when they say issued stock.
Cash and common stock, I don't know.
Yes and yes.
Yeah.
Cash going up, common stock going up. You sold it, you make the money.
Yeah, so we got more cash and we also have more.
Yeah, more stock.
Exactly, more stock.
Debit, credit.
Cash is going up, so it'd be a debit. And common stock. equity account. It's also going up, and down here, oops, wrong one. Here we go. Oops.
Customer for service.
So common stock. Oh, I got this stuff on. Should take it all out. But anyway, common stock is going to increase with. I think I put that in there because I just asked about it in the past. But the yeah, common stock is what's common stock. So, okay, so it was a press of this would be 8,000. But you already knew that because you knew the cash would be.
Cash going up. Accounts receivable.
Okay, billed customers for services delivered. And yes, I hear you say accounts receivable. That is
Accounts
correct.
receivable.
Billed customers for services delivered.
Cash.
You gotta get the cash in.
Revenue.
Service revenue.
Service. Oh, yeah, she be on those revenues.
Well, and we like the revenues because
Yeah.
it makes the journal entry very easy because now it's
Yes.
some kind of revenue. Pre-service revenue.
Service.
Revenue.
They're always going up. And whenever,
Revenue goes up with debit. Revenue goes up with credits.
yeah, if it's a revenue, they're always,
Accounts receivable.
so at this point, we can actually make the journal entry. Okay, accounts receivable 940. And again, the reason why accounts receivable is an asset is because in the future, that's going to turn into cash. And coming down here, it'll look like this.
Assets.
Oh, hey, that's it. Okay, so what I'm going to do next is I'm going to send out, I'll leave this up for a minute. I'm going to send out the
The test, the quiz.
no, the part 1, which is multiple choice questions.
Oh, okay.
And then we will and go over that. Oh no, I know how to do this. Let me share. I share my Microsoft Word with you, so it looks like this. Don't need that. Just did that. We don't do that.
You got a lot of papers. Got a stack.
Okay, so this is all right. So let me go ahead and send out the chapter 2 practice exam 1.
Two.
Chapter 2, practice exam.
And you know what, I gotta stop sharing here for a second. I'm fun to share.
Practice.
Be stingy now. Okay, I gotta. Okay. Okay, so I'm going to be sending out the part 1 part of the exam. And
Oh, exam part 1, okay.
momentarily. If you did get the email, they are available in Blackboard under the. Okay.
Okay, we got that. So what about all these papers, all these practice? Chapter
Okay,
2 practice, no. I got a whole stack here.
Okay, so here's what we're gonna do. So here's what you're gonna turn in. So the two things we did today so far, you're gonna turn those in. You cannot see what I'm doing. I'm doing that just for myself. Okay, so this is let me get rid of this up here. So the textbook exercise, the first thing we did, chapter 2, turn that in. What we just did now, the chapter 2 practice exam part 2. So part 2 will be turned in. Part 1 will not be turned in, but I'm gonna start a poll right now. And you get extra credit from the poll. I think I did. This is when I goofed up last time.
What poll?
The poll I'll be issuing soon. Actually, I'll put it up right now. So, back to exam part 1 will be there's 10 multiple choice questions, and we'll answer these as a group. Now you have to answer all 10 of them before you submit it. And as a group, if the group gets at least 50% of them right.
You say as a group,
Yeah, so the class.
so we need to get with the group?
Oh, no. The group, the whole class is the group. So you're gonna put it in, and from the poll results, I'll see how the class did, and
Okay.
and the class gets extra credit points based on that. Okay, so they just showed up on mine. You guys probably just got them too. It's a weird delay. Pull this up. It said they're also available in. Okay, so for all of these, there's only one answer that's correct. And so what you're going to do is for each one of these, so if you want to choose A, B, C, or D, whichever one you want to choose, if you go over to the poll, A, B, C, or D, pick whichever one of those you believe is the correct answer, and you're going to do this for all 10 of them. So for all 10 of these, you're going to pick one of these answers and put them in, and then submit it.
How do we do that as a group?
No. Each person does it individually.
Oh, okay.
But I'm going to take the total answer. So, for instance, if if 80% of the people pick whatever,
Oh, okay, I
D.
see. You're gonna,
then we'll say,
Yeah.
okay, D was the most popular answer, and we'll see how whether that's the correct answer or not. So, the most correct answers, if you get 50, at least 50% of them, you'll get +2 added on your test. If you get 75% or 7 of them right, +3, and if you get all 10 of them, you get +4 added on your test. So, try to do them correctly. You get more points doing it that way. But,
right.
but for each one of these, whatever one you pick, that's going to be the one that, is a group, the collection of the answers. So, however many people pick A, B, C, or D, whichever one's the most popular one is the one that is going to be the group decision. So each person is going to just fill in the poll themselves. So go through all 10 questions and then see if you can figure out, where they go and submit it. But they all have to, you have to do all 10 of them. You can't just submit 5 of them. It's just the way the form works. And,
Okay, that's that. Okay.
and I know who submitted what. It'll be, so this is how you get the extra credit points. Whoever submits gets.
This extra credit you said?
Yeah, so
Okay.
whoever submits gets extra credit, whatever the extra credit points are, get added on. So I download those. I'll know who did it when I release the answers to you guys. You won't know who picked what. So don't worry
Okay.
about, oh, people will know that I picked this one or something.
Okay.
Okay.
So start
Okay.
now.
Yeah, go ahead and start. And whenever
Oh,
you can,
okay.
put them in,
Oh,
and we get them all put in, then we'll go through the solutions, and that'll be it.
How are we doing this now?
An individual is increased
How are we doing this now?
if an individual asset is increased. How do I get to the next question? How do I move on?
You scroll.
It's not scrolling for me. Let me see. Hold on. Oh, I got it.
Wait a minute.
Wait,
I should have printed this.
Yeah,
me
yeah.
too. Wait, go back.
wait, something here. Yeah, so these are on the they're in Blackboard, and they're also emailed to you, so you can pull up your own, your own, and submit it that way.
Payment of a liability. Liability is paid. Oh.
Mhm.
How do you scroll again? Okay.
I can see.
So once you have an answer for all 10 of them, put them into the poll
Hold on.
and then submit. them.
Lost my poll.
You lost your poll?
I can't find it, but it's fine. I don't need no extra credit.
It's got to be there.
But I'm still, I was gonna just, okay.
If you minimize your screen, it should be there. Oh my God.
You scroll back up a little bit. Is everybody? Number 6.
6.
Yes, sir. Thank you.
people still working on this thing? Is there anything that needs more time?
Professor?
Yeah.
I sent you it through my regular email. Is that okay? I'm having a bit of a issue. Oh yeah, it's right there. Logging into my RU mail.
Okay, can you put it into the poll or no? In, Zoom.
Oh, sure. Yeah, I can do that.
Okay, yeah.
Okay, thank you.
Again, don't be afraid if you get one wrong or something like that, because it's done as a group, and generally the group gets the right answer, just the way it is. And also, your answers will not be broadcast out to everybody. And as a matter of fact, I don't even really look at them. I look at to see who participated. And if you do get one wrong, I mean, there's nothing wrong with that. There's a a saying that you learn nothing from success. It's only failures and setbacks are what you learn from. So if you do get one wrong, it's a good thing. You're going to learn from it. So. Is anyone else still working on it? If you are, if you just put it into the chat or say, hey, I'm still working on it. Okay. If there's no one else still working, I'm going to go ahead and close it. If you're still working on it, I'll give you a minute to contact me and let me know that you're still working on it. If you're still working on it, I'll wait. If no one's still working on it, then we'll just stop and put the answers out. Yeah, just so you guys know that. So after this class, here, I'll put it up on the screen. So you're going to turn in these two. Chapter 2 practice exam, you don't have to turn this one in because I'm going to take it off of the poll. So this is extra from the poll. You do not need to turn in the part 1. So part 2 gets turned in, part 1 does not. There's no place to turn in part 1. And then I'll be sending out the exam later on tonight. Probably be a little bit later, like say probably be after 10, just to be honestly. But so later on tonight, though, I'll send out the exams. Okay, we'll wrap this up then. Okay, so you should be seeing the results. And we will go through it, make sure everybody has, we'll see what extra credit points you guys get, first of all, and second of all. Number one. Collection of a $600 hit, so increase asset, the cash, decrease in asset, the accounts receivable. A is the credit. That's what you guys have.
I have A, but I don't have do it.
Okay, if an individual asset increased, then, so this is all of that asset equals liabilities plus owner's equity thing. So if an asset increases, well, to make it balanced, liability would have to increase, and so is stockholders' equity. But you could have C, which you guys picked.
Mhm.
Actually, this one right up here. This is actually that. Increase in asset, decrease in asset. Purchase of asset on account. Yeah, split evenly, but I'll give you this one. So purchase of an asset on credit increases assets and liabilities. That's the right one.
B, right? I got B. I got B, but I didn't tell you.
So your assets go up, but so do your liabilities.
Oh, I came back.
Payment of liabilities. You guys,
A,
this one.
increases assets and decreases.
So payment of liability decreases your assets
And liability.
and it decreases your liabilities. No trouble with that. Uh-oh. This one is kind of quirky just because payment of dividend. Well, first of all, when you pay out money, it's not going to be those two. So it's going to decrease your assets, and through the retained earnings, it's going to decrease the equity account. And I know this is confusing because the book shows dividends as increasing, but they're more of a negative. So if you're saying that's that's confusing, you're right, it is, but that's just the way they do it. So payment of a dividend, it decreases assets and it will decrease shareholders' equity. And I don't like that question. Okay. Core company purchased equipment for $1,800 cash. Oh, let's get what you guys have. And you are correct. Total assets are unchanged. When an asset goes up, the equipment, the cash goes down. The total assets are unchanged. I think I got the, hold on, I think these are on different pages. Let me match these up with the pages. Okay. Debits. Increase assets, decrease liabilities. You got that one right. Okay. 8. Recording transaction double entry system. The amount of debits and credits, yes.
C.
Good. When a company has performed services, but has not yet received payment. Debits going to see, yeah, it's the first one. Accounts receivable goes up, and so the service revenue. Okay, company receives utility bill but not pay right away. So utilities expense is correct, a debit. All expenses are debits. Accounts payable.
Mm-hmm.
Well, you guys did very well.
Pretty cool.
Yeah, we'll put +4 on those. Okay, so all right, so I will, so here's what's gonna be in Blackboard for the so you're gonna submit, let's see here. Chapter 2 exercise 2-7. That was the first thing we did.
Mhm.
So we do September 8th.
October 8th.
I'm sorry, yeah. And then also the chapter 2 practice exam. Part 2. Same thing, due on Friday, October 8th. Points. Temps. That's great. Okay. Those will get available soon. So that is what we're gonna do. So these are the ones that are gonna get turned in. And this one down here, I'm gonna turn that in. And so that one will also be in there. And let me put that in.
Mhm.
And these will be up there in a second. It takes a little time to make it feel good. Blackboard does a lot of thinking, in case you're wondering. Okay. Okay, and I'm going to close the poll and I'm going to save it. Okay. All right. So, any questions on any of that? All right. So again, now you have a week. I would encourage you to get it done before next class because we're going to cover something different. It's similar, obviously. It's accounting. Oh man. But it, yeah. So I would encourage you to get done before that. If you have any questions on it, feel free to ask me. If it's a test, obviously I can give you the answer, but if there's a clarification of what this means or whatever, they can certainly do that. But again, the test will be out by tonight. And,
Okay.
so be expecting those. And everything is due on the 8th,
Mm-hmm.
just next Friday.
Okay.
Any questions?
No.
Okay, well, you have a good evening, all,
You
and I will
too.
see you next week.
Well, have a
Bye.
great weekend.
Bye.
Good evening. Bye, everybody.
Bye.
Thank you, Professor.
Thank you.
Thank you.
Hi, okay. I'm sorry. I'm just still super confused with submittals. Okay, so Exam number 1, that wasn't it, the one that I submitted to you, because you said it wasn't right.
Did you turn in a different form? I think was that it?
Maybe, but I was,
Check your email. It should have been out like a couple weeks ago. There should be an exam that was sent to you. I think it should be Form C. Let me.
I'm gonna check 1 second.
Yeah, I think it should be Form C. So it's a similar exam. It's got different numbers and all that. But just make sure you turn in the same one that was sent out.
Okay, I'm looking. Would you mind sending it again to me?
I would
really
don't mind at all. I'll do that right after class. So yep.
I'm sorry, what?
I'll do it right after class. Send your email, the same email you sent.
And what day would you have sent it? I can't find it.
It's a while ago, but I can resend it. That's not a problem.
Yeah, would you mind
Not at all.
resending it? Thank you, I appreciate it.
It should be there in like 5-10 minutes.
Okay, perfect. Okay, thank you so much.
Okay.
Okay. Oh, wait,
Oh.
sorry.
Yeah.
So I'm sorry. So the handout, do we submit that too?
Yes.
Okay,
Yep.
okay.
And again, if you did it, if you wrote it right in the document, you can do it that way. If you wrote it on paper, you can take pictures of it, however you want to send it in this way.
Okay, thank you. Thank you so much.
Yeah.
Okay, take care. Thank you.